The gold thesis has never been stronger than it is today.
Hi, my name is Georgia Tucker with Cambridge House. If you've ever attended our conferences, you may recognize me from the newsletter walking tours. Today, I'll be speaking with Brian Leni, founder of Junior Stock Review. Please watch till the end as Brian has a special offer for all of our viewers. We'll also be talking with CEOs of Brian's top stock picks. That's Sean Roosen with Osisko Gold Royalties and Jose Vizquerra with O3 Mining. If you'd like to hear more from Cambridge House, follow us on Twitter @Cambridge. And if you click the link in the pinned comment below, you can follow our weekly newsletter. Thanks and enjoy. Well, thanks for taking some time to chat with us today. I have a couple of questions for you. So
Great.
The first one is regarding VRAC. So you've spoken at VRAC the last few years, and you set out these investing rules, and you can watch those videos on our channel.
I suggest creating a set of 10 to 15 rules that will tilt the odds of success in your favor and that you can look back on before you make any decisions.
Things like have an investment journal or always sell on a double. In this new kind of market territory, have you added any more rules, or do any come up as being more important than others right now?
That's a really good question. I haven't added any, but more than ever, I've relied on them to keep me focused on my investment thesis and how to work through my process. The emotions that can come up in a crisis like this, it can hit home. Like I'll share something with you. My parents actually had COVID, and they traveled back from Australia, and within a week of coming back, they had the symptoms, and actually my mom, with her past history, was actually quite bad. And so it was a scary moment for me. And then at the same time, the market was imploding. And, it was quite an emotional thing. And you know what? I had to separate the two, which is extremely hard to do. But I had a plan set for how to focus in on the market if it did crash. And I relied on those rules to keep me centered and to keep me focused. Otherwise, I could have been anywhere. But I did very well. And my parents battled through it. And and so it turned out well. But more than ever, what I'm trying to say is it brought forward how important it is to anchor yourself in a series of thoughts or rules. So when situations like this arise, that you can rise to the occasion and do the best that you can.
For some of our viewers, retail investors that don't necessarily do this full time, since you have now started to do, what is some advice that you'd give to stay on top of the market?
I guess it depends on situation by situation. For me, I'm a person that is agnostic to the metal. I'm looking for value in the market. And from that value, I want to pick good people that have cash and a plan to execute. And with that, there's a risk adjustment. So the amount of risk has to be in relation to the value or the upside potential. For people that don't have a focus on the market on a daily basis, I think at this point, the gold thesis has never been stronger than it is today. And I think that while I'm agnostic to the metal, I have to focus on precious metals right now. And I think it's a pretty compelling situation that we're in. And really, we've been in different crises before, 2008, and the credit crisis. But today, this is something we've never really encountered before. And we've seen unprecedented things happen, such as QE Unlimited, zero negative interest rates. I would say that we really don't know what the outcome from this is going to be. And because of that, investment in gold or the gold equities should be at the top of the list.
So are you currently deploying capital in this market? Have you been more or less active since, say, March or April?
Yep. So when basically the beginning of the new year, it kind of looked like stuff might get rocky with the stuff that was coming out of China. I'm definitely not saying that I saw this coming, but I did have a plan. And in my newsletter, we had a set game plan for how we were going to play it. And with so many unknowns, what I was focusing on, I set the buy criteria to basically focus on two companies that I thought had great fundamentals. And the biggest thing, they had a lot of cash. They basically had enough cash that would last them 1 or 2 years, depending on how they wanted to spend it. And from there, I was an active buyer. And buying the lows. It was tranche style buying because, none of us can tell where the market is exactly headed. And I think it's sort of naive in a way to think that you're going to pick that bottom. So the big thing that we did is we said, okay, we know the market is probably going to correct a bit. I specifically broke my set amount of money that I was going to spend. And I said, I'm going to break that up into 4 tranches. And I'm going to deploy that into those 2 companies every time it goes down. It just so happens that basically on the last tranche of that quantity of money I had, the market did turn. And of course I didn't know, but it worked out very well. And, since then, I've opened up the portfolio and I'm looking at a whole bunch of different companies. We've seen some good financings over the last, month or so. And, there's more companies that I think, even though we may have some rocky times ahead, I think most of the companies that, at least in the junior stock review portfolio, are well set up to weather that storm, no matter what it is. So basically, I try to remain consistent in whatever I do. And I have, again, my rules to go back on. I'm looking for value. And it really doesn't matter what else is going on. I'm going to take advantage if there's weakness in the market. And it's interesting. A friend and a mentor, he said to me actually at PDAC, and he said, people in a crisis moments, they're too scared to deploy cash. It's going to go further. This is going to happen. The world's going to end. Well, if the world's going to end, there's no difference between my money being in my bank account or invested in a gold equity. So I'll take gold equity that's on sale. And I was like, that's sage advice. And it's something that I believe in.
So you mentioned gold. It is very compelling right now. Can you speculate a high for 2020, or alternatively, can you see any possibilities for a pullback in the short term?
No crystal ball. I really don't have any idea, but I definitely have an opinion, so I'll give it to you. So I think everything that's going on, we talked about the unprecedented QE, the low interest rates, basically everything is setting up, I think, for higher gold prices. And I would tend to say that it's very possible that we will see gold at an all-time high, and that's, inflation adjusted high. So, probably $2,000 per ounce or in and around there, maybe by the end of the year. With that said, in the short term, like let's say the next 3 to 6 months, which brings you almost to the end of the year, but I see tremendous risk. And I think because we've never really been in a moment like this or a situation like this, it's hard to say what could happen and what the different fallout may be. And I think as gold investors or junior resource sector investors, it'll be interesting to see if the junior resource sector is able to decouple itself from the broader market. And I really see the risk, especially in the broader market. But you never know. The case for gold and gold equities, I think, may be able to decouple itself. But that's in the short term. The long term, I don't see lower prices for gold. I see it going up. So,
if you had to speculate, do you see a bigger upside for silver or gold stocks at this time?
Well, here's what I'll say. There's definitely more upside in the equities, but in saying that, there's way more risk. There's much more risk.
If you like the metal or you're bullish on the metal, buy the metal.
It's complicated, right? You can have great people, and great people can still fail. And they have an exploration program and they don't find the mineral. Okay, like what are you going to do? The other side to that is with the metal, it's pretty straightforward what's going on. The markets are complex, but it's more straightforward. Supply and demand fundamentals and what's going to cause that price to go up over time. So I think for investors, you need to distinguish between the two and realize that if you're investing in a silver or gold company, that you're investing in the people and the ability of those people to execute. You can make money in the short term on, the rise, silver prices going up. And we've seen this. The silver price is popped up, let's say 10%. And then the gold equities have gone up 40, 50, sometimes they've doubled. For what? And it's usually people are like, oh, it's got leverage to the silver price. Well, if the exploration program isn't successful, or if these guys can't actually develop this project into a mine, well, then the silver price doesn't really matter.
Again, I know that you said precious metals are definitely the most compelling right now, but are you keeping your eye on any other metals?
Yeah, of course. Probably next to precious metals, I'm most interested in nickel.
Mm.
Me personally, I'm more bullish than ever on nickel, and feel that the future is very bright.
There's even with, the oil price has sort of crashed over the last couple of months. It's been pretty public what has happened. These, negative crude on that one day of trading. But even besides that, I think the world is heading towards electrification, and the nickel market is actually quite small, especially if you compare it against something like copper. The nickel market is 2 million tons. When you do some easy math and you say, okay, well, if EVs represented 10% of global demand for vehicles, you're talking about roughly 1 million tons of nickel, class 1 nickel, that is going to be required to feed that market. And basically that 2 million tons that's already there is spoken for. And, there are some projects that are coming online. But I think out of all the metals, that electrification or EV movement is going to disturb the nickel market the most. And I really think you're going to see in the future, you're going to see battery makers buying deposits that are going to become mines to secure that supply. Especially, I think, even what you're seeing today with this sort of protectionist type of viewpoint, what's happened with manufacturing in China and this COVID-19, they want to bring manufacturing back. So even if they do, but besides that, they're going to have secure that supply. And these battery makers are going to be set up near where those nickel deposits are. And in North America, there's some pretty interesting places.
So let's talk about the Osisko Group. So they've been on your radar for a very long time. And how did you become so enthusiastic about them? What boxes do these various companies check off for you?
So I think there's a couple things. For so long, especially in this bear market, one of the big things, and I talked about it earlier, was access to cash. And the one thing that's always stuck out to me is, they had that huge success with Malartic, sold it to Agnico Eagle and Yamana, and then right after they've got Osisko Mining that comes out, and they've got the Windfall project. Now, if you look at Windfall, and they were able to raise something like $400 million in a down market. And they were able to, and they just hit 1 million meters of drilling, I think it was last year. You don't see many groups or people that are able to not only talk about doing something like that, but actually do it. And not only that, there's some huge pluses to how they raised that money. It was less dilutive to investors because it was charitable flow through, which is something if investors don't know about it, definitely Google it and find out and see why that's a benefit. Mm-hmm. Secondly, I'm really impressed with the people that I've met, whether it's John Brzezinski or Jose Vizquerra. I really like these people. I like their attitude. I like how they design their approach to development of a mining project. So to me, those things all funnel in together and are a big reason why one of the Osisko companies, O3 Mining, is my largest position in my portfolio.
Awesome. Well, enough from me. Let's switch gears a little bit and have a chat with two of the three companies from the Osisko Group. We have O3 Mining and Osisko Gold Royalties, so we can learn a little bit more. Brian and I had just been discussing some of his investment strategies and some forecasts. I know he has some questions for you, but just before we dive into those, can you give viewers a brief overview of Osisko Gold Royalties, Sean?
Sure. So Osisko Gold Royalties is the fourth largest gold and silver precious metal royalty and streaming company in the world right now. So we started this company after the successful construction and sale of the Canadian Malartic mine in 2014. And that turned out to be Canada's largest producing gold mine, and ranked about 10th in the world right now and produces between 650 and 700,000 ounces, and that was our cornerstone asset starting out in 2014. We've fast forward to now, we have 135 assets, 16 in production, and we did about $150 million in gross revenue last year with 91% gross margin on them, and we continue to be a big investor in the space, and our market cap of the company currently sits at about $2.5 billion. 2.2 to 2.5 billion, depending on what's going on with gold price and what's happening. And we continue to drive a big Canadian portfolio of what we call the accelerator companies here.
In my view, there are a number of important aspects to consider when investing in a royalty and streaming company. On the quantitative side, I personally look at three ratios: the price to NAV, enterprise value to EBITDA, and the price to cash flow. After getting a good handle on these ratios, I think that it's important now more than ever for investors to contrast that value of these quantitative ratios with the risk associated with the company. First, how does Osisko stack up against its peers with these ratios? And secondly, from a jurisdictional viewpoint, where is Osisko focused?
So from a, from a primary value standpoint, we're pretty good. I would add that we're the top paying dividend in the royalty and earnings space at about 1.4 to 1.6% on our current share price, and some of that's been driven by a slightly suppressed share price. On EBITDA, I would say that we're in the top one or two, and we have a growth profile. We spent the last 5 years really putting together a growth profile that brings us to somewhere around 140 to 150,000 ounces of GEOs per year on all the things that we're on. We've had steady year-on-year growth from the start of about 14,000 ounces in 2014 GEOs to last year of about 78,000. But our margins are quite high. We have the highest margins of anybody in the royalty sector at 91% gross margins. And our cost of capital, has been up and down, but we did quite a few of the transactions in the royalty and streaming space in the last 5 years, with the acquisition of Virginia for $500 million, the acquisition of the Orion portfolio in 2017 for $1.1 billion, and a bunch of other projects or assets that we've acquired, through different investments for about another $500 million of deployed capital. So we continue to be, I think, a leader in almost every category on that space. We do have a more complicated business model than some of the other royalty and streaming models, which is why I think our numbers get better as we go forward. There is a bit of a discount on us because of some of the things that we did do in the fast growth cycle that we chose to do with. We made an investment in a portfolio with Orion that included the Renard mine, which was in the diamond sector, so we took a bit of a setback on that. And we took a setback on Lydian, which was a mine that was 55% built, that ran into some political blockages. Is fully permitted with the entire mining fleet on site ready to go, so it's on standby. And then the acquisition of Barkerville in September, which was the first time that we'd acquired 100% of ownership of one of the assets that we're invested in within the company. So there's been a bit of a wait and see on that asset within our portfolio to see how that comes out. But we really think that is a spectacular asset. We want to see happen there what happened at Windfall, where we started that company in 2016 with an $8 million market cap, now $1.2 billion. That's with a B. And then John has done a spectacular job with his team to really take that discovery to the next level, and most recently raised $170 million on Monday of this week to complete that and to fast track that project through feasibility, permitting, and into the mine construction phase. And really a spectacular success. And the access to capital has been part of the strength of the group, is that we have long-standing relationships with traditional investors in the space, and we've been able to access capital in a way that most other groups have not for all of our associated companies. And that's what we talk about, the accelerator group of companies, and there's 7 or 8 of them. We try to incubate a new story each year, and in that process, we look and we identify a good asset. We pick members from our technical and financial team, put them into the group, and we give them the initial financing, and we set the stage for Osisko Gold Royalties shareholders to benefit from that leadership and to go forward. And then we support the company as we go through those cycles. And that gives us, as Osisko Gold Royalties, really an organic world to create royalty and streaming opportunities in, rather than just being in a drag race on cost of capital with Franco-Nevada, Wheaton, and some of the others. So we're a little bit unique in that way, but we're looking for double-digit returns, sort of private equity style returns, as opposed to single-digit normal returns from our portfolio. And we have the toolbox and the people that allow us to do that business model, and nobody else really has been able to get into the model.
Very good. That's a great segue to the next question. So not only are Osisko's fundamentals great, but from a growth potential, which again are primarily focused in Canada, where I see a ton of value. Can you take us through Osisko's short-term growth potential from existing operations all the way to those that are soon to be commercially producing?
Sure. So the most recent mine to come online is the Victoria Gold's Yukon mine, which is the Eagle mine located just north of Mayo, just off the Arctic Circle. I'm on the board of directors there, a fantastic team. They completed the construction of that mine in November of 2019, ran the commissioning in the winter in the Arctic. Always a fun idea. But we were able to work through the winter, and now it's a heap leach mine, which that far north, everybody had their skepticism about it, but we've been able to work through both winters, one for construction and one as we were commissioning. So we think that that mine is going to produce around 220 to 250,000 ounces a year. The upside in that project is that we have a 5% top line royalty on the existing resource, and then a perpetual 3% royalty. So it's a pretty big size royalty for the space. And there's a difference between royalties and streams. And royalties are obviously the preferred item to have because there's zero offtake agreements, so it's pure profit. It's 100% ounces delivered to our account. And that mine, we think, has some upside because the original feasibility only called for 9 months a year of stacking on the pad. And we assumed that for the winter months that we wouldn't be able to stack, but we proved this year that we can. And Fort Knox at Kinross has been doing that. So we think that that's going to be a big catalyst. So that's the next big mine to come into our portfolio as that thing ramps up and goes through commercial production this year. And then next year should be its first full year of production. So that one is going to deliver about 10,000 to 12,000 GEOs a year to us, which is, a very competitive asset. Our cornerstone asset is Malartic, which is, somewhere between 30 and 40,000 ounces a year of zero cost gold coming onto our portfolio. We also have a sliding scale royalty on Eleanor, which has been recently bought by Newmont through the Goldcorp acquisition here in Quebec. We are at 2.25%, but that royalty grows every 500,000 ounces. They augment the royalty. So at the end, we'll have 3.5% royalty on that mine in perpetuity. So those are pretty strong cornerstone assets within the growth pipeline. Obviously, we're hoping that Windfall Lake will go into production, which we have between a 2 and a 3% royalty on. And then obviously we own the Barkerville asset right now through the control of North Spirit, but we have a 5% royalty on that. That one's at 4.4 million ounces in the PA study now, but it's a camp size play as well, much like what you saw at Windfall, where we had over 2,000 square kilometers of mineral rights. Barkerville, we have about 2,000 square kilometers as well, and we've outlined about 83 kilometers or 52 miles of mineralized trend there. And we have identified 4.4 million ounces just on the 4 kilometers that we've drilled on so far. There's an existing mill there, and we're looking to fast track that project into production. Hopefully small production will start in 2021. And then the larger project, which is about a 4,000 ton a day mine, underground mine with potential to grow significantly more than that, will start at about 200,000 ounces a year. With a 5% royalty on that, will generate around 10,000 ounces a year for us. But we think that trend continues to develop, and the vision there is that we end up with 5 to 10 mines along the trend that are contributing to a central processing facility as the mine develops underground and the exploration continues. But that first mine only goes down to 350 meters, and we've drilled about 40 holes under the resource, and we've tracked the mineralization down to about a kilometer, so more than double what we see right now. Just in the vertical extent, and then on the trend again, 4 kilometers out of 83 that have been drill tested. And really our technical team with Chris Loader, led by Chris Loader, one of our senior geologists, and Terry Harbert, they really cracked the genetic code of that deposit and generate what we think is like a generational opportunity, much like what we did in Malartic and much like John has done at Windfall. It's about the next step of what the accelerator company looks like after it's been successful.
Okay. So obviously there's a lot of potential of growth on the horizon. I believe that Osisko has the knowledge and the experience to execute on their vision. While knowledge and experience are the most important, nothing happens without a healthy balance sheet and access to cash. Can you give us an overview of your balance sheet and credit facility?
Sure. So we have available capital to us right now of about 900 million between all of our assets. So about 220 million of that is in cash. We have a undrawn portion of our debt facility of about 400, I think it's 21 million right now. And that's really a revolver that we can use for acquisitions or project financing. And we have an equity book that sits at around 260, 280 million. So one of the bigger liquidity groups available out there in terms of firepower. And we most recently received an equity investment from Investissement Québec for $85 million in straight equity. So, and we have about $350 million of debt coming due. Most of it comes due in 2022. About 50 million Canadian coming due here in 2021. That's held by Investissement Québec, which is the investment portfolio arm of the Quebec government. So that we see that as very good partners to be there. And, our equity partners and owners of the company, we have the Caisse de Dépôt at about 12%, Investissement Québec at about 5.6%, FTQ at about 3%, which is the Fonds de Travailleurs de Québec. And then we have some of the big U.S. international guys like VanEck and the traditional Sprott Asset Management with John Hathaway and Doug Groh, Franklin, and some of the other groups in there. So we also travel with solid partners with deep pockets. So when we get to a bigger deal, we cast a bigger shadow than maybe we look, because we can syndicate with our existing shareholder base if we see a significant opportunity. We have in the past with the Caisse de Dépôt and IQ, and also with the FTQ under certain circumstances. So we like to travel as an institutional shareholder. We act responsibly from an ESG standpoint. As an institutional grade investment company, we're listed on the New York Stock Exchange as well as the TSE. So we're one of the senior groups here in Quebec. Probably the biggest market cap of any of the resource groups based in Quebec at this point in time. And we continue to work with those, significant pension funds. We've also done deals with the Canada Pension Plan for debt deals. But, the Caisse de Dépôt is a $320 billion Canadian pension fund and second largest pension fund in Canada that is our core shareholder. So we work on that basis that we have to go forward, identify those opportunities, and they have to be institutional grade opportunities. But we do have the ability to bring big capital to bear on a project as well.
Great. So finally, the last question, tying it all together, how does Osisko incorporate ESG into its business model?
So, some people can talk about ESG, they can write about it, but we've actually done it. I think Canadian Malartic is our calling card. When we went to Canadian Malartic, we actually had to move 20% of the town of about 3,500 people, so 250 houses and the institutional buildings. So we spent $180 million on infrastructure for our community to make sure that we follow the Osisko policy, which is we always leave everything better than we found it. And when the mine is done, there's significant value left for the communities and the partners that we work with. So we have a pretty good calling card, I think. We built a school for 425 children that was geothermally heated with solar power, 60 long-term care facility rooms, brand new state-of-the-art daycare as well, a community center for 800 people. We created a partnership with the Museum of Malartic and Mine Site Tours, which has become the biggest tourist attraction in all of the Abitibi to go see the big trucks and the big equipment. And we've also created a Fonds d'Assort, which was the community relations fund that there's contribution from the company goes in for cultural and community support throughout it. We had a No Child Left Behind policy on high school diplomas, and anybody that wanted a job at the mine, if you didn't have a high school diploma, we would pay to help you get one. And no matter what happens, it's always going to be better that we were there than if we weren't. Well, thanks very much. And, I wish everybody a safe exit from this COVID-19. And, please have a look at the Osisko website, Osisko Gold Royalties website. We have a lot of information there. We're always happy to talk, and we're very proud about the work and the projects that we have. So, making us talk about them is the best thing you can do for us. And we would like to make you some money and make all the investors proud.
Awesome. And Sean, can you review those ticker symbols for us again?
Sure, it's OR, which is French for or is French for gold on the TSX, and OR on the NYSE as well.
Up next, we have Jose Vizquerra with O3 Mining. Jose, before Brian asks his questions, can you give us a brief overview of O3?
Sure, Julia. Thank you for having us in your program. O3 is a company that started as a spin-out from Osisko Mining. Is the third version of Osisko. O3 stands for being the third version, if I can be reiterative. And we have 3 buckets on where we're working on. So we have advanced projects, one of them where we are pointing towards production, another bucket of projects where we are increasing the resources, and finally another bucket of projects with advanced exploration, where we are, as the name shows, advancing the exploration and showing the footprint of the resource that we will have.
So success as a CEO in the junior resource sector has many facets. You need to have the ability to communicate, formulate a vision, have knowledge across a few different subject matters, and of course have experience in the mining business. For those who don't know, Jose comes from a family of miners and has lived and breathed mining his entire life. Jose, can you tell us a bit about your background and how your experience pre-O3 mining has helped you create and execute a vision for the company?
Sure. Well, I was very privileged to be born in a family where as you said, we were breathing mining. My grandfather, Alberto Benavides de la Quintana, started a mining house in 1952, originally renting a mine and subsequently developing several mines, including Yanacocha, which is one of the largest Latin American gold mines in the world. At some point, they even produced 3 million ounces. For me, well, I'm humbled to say that, being his grandson, of course, is having a very big backpack because, I have a very big standard to where I'm trying to aim. And the most important thing, I guess, is what I learned from him. And I think what I learned from him is to always make sure that you can work with multidisciplinary groups and work together to achieve a common goal, which is give back to your shareholders and stakeholders.
Jurisdictional risk should always be on a checklist of a junior resource sector investor. In my view, it's more important than ever as COVID-19 crisis has added to the uncertainty in the world. With that said, I think countries like Canada, particularly specific regions such as Val-d'Or, become even more important moving forward. Could you give us an overview of the Val-d'Or Gold Camp and why owning property within it is so valuable?
Of course, Val-d'Or is a very unique place for several reasons. By instance, infrastructure is the most important one. We have railroads, we have roads, we have power, we have water, we have sewage, and more important, we have very talented group of individuals that makes Val-d'Or very special. I mean, the quality of miners we have, the quality of drillers we have, the quality of providers we have for the mining industry, it's exceptional. This is a town with, in general terms, very well-educated group of individuals. It is a dream place to work, if I may say. And the reason is because usually mining, we work in very far areas. No, I mean, you're in the highlands or you are way up north. Val-d'Or is one of those places where, although you are not close to a main city, let's say like Montreal, still a city has been developed through mining, where people goes to work and then they go back to their houses and spend time with their families or spend time with their friends. And it's a very unique situation there. And I think that's why Val-d'Or is so prosperous.
I completely agree. I did a site visit there last summer. It was my first experience, and it was evident. The mining right across the towns. Malartic to the west of Val-d'Or, and it's one of my favorite regions as an investor. O3's main properties, Marban, Alpha, and East Cadillac, are all in the Val-d'Or region. Last fall, O3 began a 50,000 meter drill program, which was primarily focused on expanding the existing resource along strike and at depth. Can you give us a brief overview and a few of the highlights to date from each of the properties?
Of course. So I may say first that the Abitibi is a very special region for mine. 70 million ounces have been produced in the Abitibi, going from Quebec to Ontario in the Cadillac Ladder Break and then in the Destor Porcupine. What Val-d'Or is a very unique area where these two kind of faults gets together and makes this very important break on which we have been able now to assemble an extraordinary land package where we have pretty much 2/3 of Val-d'Or. Within that land package, we have 3 buckets where we focus. The first one, Malartec, with our main project Marban, on which we are doing our PEA. And then towards the northwest with a very great potential to find probably another mine from where we can bring the ore back into the main future mine called Marban. The second bucket is an area of resource development where we have 4 different sectors. One of them, we call it Sector 1, where we have Orena number 4, Orena number 2. We have a project called Bulldog, and then I call the Epsilons. And this area, this Sector 1 has 5 kilometers strike length. And we already have there 400,000 ounces, which we believe we can extend them at depth in a very efficient way by being systematic. Our Sector 2 is towards the east. And in that area, we are just east from an Agnico Eagle property, which they recently got the permits to mine, which is very interesting. And then Sector 3 is towards the north. And that area, we call it Sector 3, and we have 2 main projects, one called Goldora and the other one called Simcar. In Simcar, again, another area where we already have a resource, around 60,000 ounces of 6 grams. And we believe that in Val-d'Or in particular, you can extend the mineralization at depth if you are consistent with your exploration. Something that happens in general in Canada, as you can imagine. Most of the deposits in Canada has become world-class deposits by drilling at depth. You go to Red Lake, the Red Lake camp was just okay. When the guys from Goldcorp with Rob McEwen arrived there, they drilled at depth and the thing grew dramatically. You go to Windfall, where I was very much involved with John, who is now the CEO. And when we got at Windfall, the thing was not looking that great. Now there is 5 million ounces of 8 grams. And the same thing happened to Musselwhite. And I believe the same thing will happen to us. The same thing happened to the guys at Agnico with LaRonde, with Lapa, with Goldex, just by drilling at depth and by being systematic. So once again, 4 buckets, Sector 1, Sector 2, I just explained beside Agnico, Sector 3, where I was referring to this area where we can grow. And Sector 4 is only a couple of meters really from that Triangle deposit, which used to be an Integra Gold project that was bought by the guys from El Dorado. So that's our second bucket, a bucket where we are developing resources. And our third bucket is advanced exploration. We call it East Cadillac to that area. And that area is a very unique area because it has been very much underexplored. And we did 4 fences of exploration in our initial campaign that just finished a couple of months ago, just in March. And we were able to find very good results there. So I believe that in East Cadillac is just the beginning of something that could be really important.
The ability to raise cash is a major strength of the Osisko group of companies, especially when it can be done via charitable flow-through. Recently, O3 raised $35 million in both charitable flow-through and hard dollars, giving the company plenty of capital to further explore and develop Alpha, Marban, and their East Cadillac properties. First, I think it's pertinent to educate investors on why charitable flow-through is a great way to raise money for a junior resource company. Can you explain?
Absolutely. So the way it works is very simple. It allows us, flow-through, first of all, is a way to invest into natural resources. And we have to be very clear with that. It is a way for the governments to promote the investment in natural resources. And the way it works is they allow you to have a premium at which you raise the money. So you have less dilution as a company, and they make sure that the money goes into the ground. Why? And why they do this? For a very obvious reason. You generate jobs. which is very important. You improve the quality of life of those individuals in those regions. And third, if you are successful in your drilling, you are generating a lot of value by finding gold or silver or copper, depending on what you are exploring. But the main point here is that by raising flow through allows you to have less dilution. The dilution you have is in the order of 60% less.
That's great. Finally, you just announced that you'll be increasing the previous 50,000 meter drill program to 150,000 meters. This is a big increase, one which shows a lot of confidence in your properties. Can you take us through the vision for the drill program? Mainly, where are you focusing your attention?
Of course. First of all, the main vision of O3, becoming a producer. Within that, we have 3 buckets. Again, Malartic with Marvan going on a PEA development stage, right? And that's very important because O3 has moved now from being an exploration company to need to be a development and exploration company, which makes things very different. So again, Marvan with the exploration program on the north. If we find something there, we will be able to process that in Marvan. So very important to have exploration in that area. And we are considering around 10,000 meters there to do initial exploration. We move into Alpha, and Alpha has 4 main sectors. And we already have a mill to where we can send this material. Clearly, Alpha will demand quite a bit of drilling, and we'll spend probably around 100,000 meters of drilling in the area of Alpha. A lot of those being into sector 1, where we have 5 kilometers of strike length, where we already have identified 3 areas with quite a bit of mineralization: Orenada 2, Orenada 4, and Bulldog. And Bulldog, now we have it, the tiger by the tail, and we believe that it's just a matter of continue to drill at depth, and we're going to make that very big. And finally, is Cadillac, where we have advanced exploration, where we believe we can grow that into, I don't want to call it to a resource, but certainly close to that. We'll have a very good idea of the footprint, of the geometry, of the 3 dimensions that we could have in East Cadillac. And we're talking there in the order of 40,000 meters of drilling. So we're talking about 150,000 meters of drilling to add value to shareholders and certainly to the areas where we operate. And that is a great thing. You know, we believe that certainly a lot of the unsuccessful companies that were before us in different jurisdictions where we have operated were unsuccessful not because of not having the tools to explore, not because they didn't know what they were doing. On the contrary, I believe that they did their best, but it was a matter of having the opportunity to have enough capital to deploy and to execute a plan. And that is what O3 has. O3 has the opportunity here to drill intensively, systematically, knowing what we are doing, with the protocols that has to follow, especially in a situation like this, what we are dealing in the world, and to be able to be successful. And we're very confident on what we are intending to do here.
Very good, very good. Well, that was my final question.
Awesome. Well, thank you so much, Brian, for those thoughtful questions. And Jose, it was really great to learn more about you and O3. Jose, where can viewers learn more about O3? Can you share the website, any social handles, and the ticker symbol as well?
Absolutely. So www.o3mining.ca. It's our website. You can also just Google it, O3 Mining. O3 Mining is OIII in the Toronto Stock Exchange venture. Please follow us.
Awesome. Thank you. And Brian, where can viewers follow your insights and strategies?
You guys can find me at juniorstockreview.com. I also write a premium newsletter, Junior Stock Review Premium. And I'd like to offer your viewers, if they're interested, in a 40% off discount for Junior Stock Review Premium by entering the coupon code Osisko, OSISKO. They can receive that 40% discount, and hope to see you there.
Hi, everyone. Thanks so much for watching. If you'd like to hear more from Cambridge House, please follow us at Cambridge on Twitter and follow our weekly newsletter by clicking the link in the pinned comment below.